A good late afternoon and thanks for joining us. I'm Sage and you're watching 𝐶𝐞 TV live from Sydney. This is the last show of the day, the last trade. There's no better way to wind down the day than with today's market close commentary, of course, so let's dive straight in. And the Australian shares wiped out most of the early gains to end marginally higher on Thursday, led by the sharp selling across utilities, tech, realty and healthcare space. The market sentiment was also dented by a sell-off in the blue chip stocks, such as the Commonwealth Bank of Australia, Rio Tinto and Appen. The concerns about the rising COVID-19 cases as well as lockdowns in Canberra and tougher restrictions in more parts of Sydney also left investors jittery. And the ASX 200 ended 4 points higher at 7,588. And early today, the benchmark index opened higher and gained as much as 0.3% to hit an intraday high of 7,608.6. Among the individual stocks, agro-based company GrainCorp topped the gainers list on the ASX, and the stock settled with 11.24% gains after it upgraded its earnings guidance for the financial year 2021. The company's managing director and CEO, Robert Spurway, said the current heightened demand for Australian grain has bolstered an outstanding year for the agribusiness segment. And some of the other notable gainers were insurance firms QBE Insurance Group and Insurance Australia Group, industrial services provider Downer EDI and casino operator Crown Resorts. On the flip side, online marketplace Redbubble emerged as the top laggard, falling 8%, and some of the other notable losers were blue chip miner Rio Tinto Group, energy firm AGL Energy and software firm Appen. Next up, let's see how the sectoral indices performed today. And the market witnessed a mixed trade today as 6 of the 11 sectoral indices ended in the red zone, and telecom sector emerged as the top performer with 2.3% gains, and followed by consumer discretionary, which rose 0.7%. Some of the other sectors that closed higher include consumer staples, energy and industrials. On the flip side, utility sector emerged as the worst performer, falling 1.6%. And the information technology and healthcare index also settled with 1% loss. Among others, AREIT and financials also ended lower with marginal losses. And in the banking pack, 2 of the big 4 lenders, Westpac Banking Corporation and Commonwealth Bank of Australia, ended lower, while Australia and New Zealand Banking Group and the National Australia Bank settled marginally higher. And now, before we take a look at the shares that are in the news today, it's time for a short break.
Hi there, James Preston for 𝐶𝐞 TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. 𝐶𝐞 Tech Beat has the latest in what matters in the world of technology. Join me every single Monday on the Tech Beat, exclusive to 𝐶𝐞 TV.
Welcome back. This is Sage. You're watching 𝐶𝐞 TV live from Sydney, and this is the last show of the day, the last trade. In this segment, we'll now shift our focus towards the stocks that created a buzz today. And shares of National Australia Bank traded flat after the country's third biggest lender released its earnings result for the June quarter, and the bank has reported a 10.3% rise in the third quarter cash profit at 1.7 billion Australian dollars, helped by credit growth and lower loan losses. NAB Chief Executive Ross McEwan said that the bank face uncertainty due to fresh outbreaks of the Delta variant of the COVID-19 virus, which triggered lockdowns across the country. However, Mr McEwan remained optimistic about the long-term outlook for the Australia and New Zealand. Shares of blue chip miner Rio Tinto Group declined as much as 7% to hit an intraday low of $120.15 Australian after trading ex-dividend, and the stock of the world's leading metals and mining company also topped the losers list on the ASX. Rio, in its earnings release last month, had announced a special dividend of $1.85 Australian per share and an interim dividend of $3.76 Australian per share. The ex-date for dividend distribution is August 12th, while record date is August 13th, 2021. The ex-dividend date, also called as the reinvestment date, usually falls one day before the record date. Shares of Commonwealth Bank of Australia dropped as much as 2.4% to $105.54 Australian today after hitting record highs in the previous session. Investors seem to have resorted to profit booking after the lender reported strong earnings and announced bumper share buyback worth $6 billion Australian dollars. Commonwealth Bank, one of Australia's big four lenders, reported a cash profits of $8.8 billion Australian dollars for the financial year 2021, which is up 20% as compared to the same period last year. The bank also announced a final dividend of $2 Australian per share for the 6 months to 30th June 2021. The bank, however, cautioned that the lockdown imposed will contain the spread of COVID-19 outbreaks, could also hit the country's economy in the coming months, while low interest rates would put pressure on the earnings. And the Australian telecom company Telstra Corporation gained as much as 4.4% to hit a 52-week high of $4 Australian apiece after it reported its results for the financial year 2021. The company has announced on-market share buyback of up to $1.35 billion Australian dollars. And for the full financial year 2021, net profit after tax rose 3.4% to reach $1.9 billion Australian dollars, while the total revenue income dropped 11.6% to $23.1 billion Australian dollars. The earnings were driven by improved performance of its mobile business. And in the second half of the year, mobile service revenue grew 3.7% over the prior corresponding period. The blue chip wealth manager, AMP's shares rallied 4.17% to hit a high of $1.13 Australian after reporting robust earnings growth in the half-yearly results. For the half-year ended 30th June 2021, the net profit after tax jumped 57% up to $181 million Australian dollars compared to the prior corresponding period. The Australian wealth management assets under management rose as well 8% to $121 billion Australian dollars, while wealth management net cash outflows declined to $2.7 billion Australian dollars. The board of the company has not declared any interim dividend for 2021. And shares of Australian energy retailer AGL Energy dropped as much as 4% after its earnings failed to meet expectations. The company reported a statutory loss after tax of $2,058 million Australian dollars for the financial year 2021, compared to a profit of $1.01 billion Australian dollars in the last fiscal. The loss includes $2,929 million Australian dollars of impairment losses, onerous contracts and costs from acquisitions, restructuring and cessation of the Crib Point project. Underlying earnings before interest, taxes, depreciation and amortisation stood at $1,666 million Australian dollars, down 18% on the financial year 2020. The firm also declared a final dividend of 34 cents per share. And now, before we look at some more shares that are in the news today, it's time for a short break. Property by 𝐊𝐿𝐼𝐚. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on 𝐊𝐼𝐚 TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with 𝐊𝐼𝐚. Welcome back, viewers. Sage here. You're watching 𝐊𝐼𝐚 TV live from the Sydney studio, and this is the last show of the day, the last trade. And the proteomics International Laboratories shares have come into focus, rising 9% on a deal with the French immunoassay specialist Biothem. The healthcare firm has contracted Biothem to manufacture test kits for the ProMarker D predictive test for diabetic kidney disease, and 𝐕𝐢𝐝𝐻 has been making specialised immunotechnology products for more than 40 years, and its core competency is in immunoassay production, covering ELISA, that is enzyme-linked immunosorbent assay, and also ALFIA, that is lateral flow immunoassay technology. And the share price of clean tech water dropped over 6% on Thursday. The water treatment company has signed a technology service agreement with Sunrise Energy Metals. The scope of work includes the continued provision of certain technical research and development services at the Sunrise Battery Materials project in New South Wales. And Cleantech Water possesses an expertise in metal recovery and recycling and the use of ionic resins to improve the efficiency of such processes. Shares of spatial data and solutions firm Veris gained as much as 7% on strategic review of Aquera for demerger. As a result, VRS has resolved to pursue a demerger of its wholly owned subsidiary, Aquera A. And the separate ASX listing of Aquera will provide Veris with an opportunity to realise the value of its historic investment in Aquera. VRS will maintain an ongoing substantial cornerstone holding, and VRS shareholders will get a priority opportunity to participate in Aquera's listing raise. And now, before we take a look at the Asian markets performance and crypto space, it's time for a short break.
Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
Where the property market is headed next.
what the world is doing to become more environmentally friendly.
Apart from tracking the daily market charter.
Be on top of the latest news and announcements
With 𝐊𝐴𝐚 TV.
Hello, welcome back viewers. Sage here. You're watching 𝐊𝐴𝐚 TV live from Sydney. This is the last show of the day, the last trade. And now in our next segment, we'll take a look east towards the Asian market performance. And the Asian markets were trading lower on Thursday, undermining firm cues from Wall Street, and investors remained cautious amid concerns that the spread of the Delta variant of the coronavirus may derail global economic recovery. And China's Shanghai Composite and Japan's Nikkei were trading flat with marginal losses, while South Korea's KOSPI declined 0.25%. In a similar trend, Hong Kong's Hang Seng was down 0.1%, while Taiwan's weighted stock index fell 0.3%. Bucking the trend, India's BSE Sensex gained 0.3%. Jakarta's composite in Indonesia rose 0.5%. Moving on from Asia now to the US, Wall Street closed high on Wednesday, boosted by a drop in inflation, and the US inflation growth eased in July, which shrugged off fears that the Federal Reserve would rush to reduce its economic support, and the Dow Jones Industrial Average rose 0.63% to close at a record high, while the S&P 500 added 0.25%. The tech-savvy Nasdaq Composite fell 0.16%. In the last segment of this show, we'll take a quick look over the crypto market's performance. The cryptocurrencies were trading mostly higher during the Asian trading hour on Thursday, despite declines in US inflation, which bolstered demand for equities. Investors also shrugged off concerns that the US Senate's $1 trillion infrastructure bill may impose certain taxes and restrictions on the cryptocurrency sector. And Bitcoin, the world's largest cryptocurrency by market capitalization, was trading flat. The most popular crypto breached the $46,000 level in the past 24 hours trade, and its highest level since mid-May. Ether, the world's second largest crypto, also rose marginally. The coin witnessed strong buying last week after a software upgrade, and the Ethereum blockchain network updated its software called the London Hard Fork. That included a fee reduction feature, and meanwhile the price of other digital currencies such as Dogecoin, XRP and Cardano were also in an upbeat mood, gaining in the range of 5% to 15%. And thank you for joining us on that report, but that is all for now in the last trade. And with our existing operations in Australia, New Zealand, UK and Canada, 𝐊𝐴𝐚 Media has launched its operations in the US markets. And every day in our first show, the Global Market Roundup, you can get the latest and the important news of the US, Europe and Asia Pacific markets. So on that note, we'll see you tomorrow as close as possible, 10 a.m. live from Sydney. Sage signing off.